Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. It is a sunny Friday here in Seattle, Washington. I hope you guys are doing fantastic. Today we have Savannah Arroyo with us from the Networth Nurse. Savannah is a nurse turned real estate investor. Actually, she's still a nurse, and so she hasn't left that behind. She does multifamily syndications with a $10 million portfolio, so she has some good experience behind her. I am super excited to dive into this. Savannah, thank you very much for hopping on the show.
Yeah, thanks. I'm excited to be here.
Absolutely. I told you before we got on here, we like stories. We like to hear how people got started. So why don't you take us back to the beginning of your story? How'd you get started in real estate?
Yeah, definitely. So it kind of starts with my career in nursing. I always wanted to be a nurse, even out of high school. I went right into college pursuing my nursing degree. And then when I graduated with my nursing degree, I worked in a few different hospitals and different specialties. And I just was naturally drawn to different leadership roles, process improvement. I love operations. And although I love patient care, I love supporting nurses even more. And so I really had my eyes set on becoming a CNO, a chief nursing officer, and started climbing the corporate ladder to get there. And beginning of 2020, after having my second daughter, my priorities really started to shift. And my husband and I sat down and started talking about the life that we wanted to live and how involved we wanted to be in our daughters' lives. And our very demanding full-time Monday through Friday, 9 to 5 jobs really didn't leave us with a lot of room to live the life that we wanted to live with our daughters. And so we were very dependent on our W-2 income at that time. And so me having to hand over both my babies at 3 months old to a daycare provider was very difficult and made me realize how dependent I was on that W-2 income. And so we sat down and started looking at alternative ways to build wealth, different income streams, stumbled upon real estate for obvious reasons. It's one of the best ways out there to grow wealth, and started investing in single family homes. And then really shortly after switched into multifamily syndications.
Nice, man. I love it. Short and sweet. And I feel like a lot of people that trajectory, it really rings true with them. You know, they're going down a career and then they have a family and they realize, well, crap, this does not align with my values. This career is not in line with how I want my life to look. And so, you know, you landed in real estate, great place to be. When it sounds like you were doing some single family before you really decided to take the bull by the horns and go into multifamily. How did you make that transition? What was your first kind of foray into real estate?
Yeah. So when we started learning about real estate, binging podcasts, reading every book we could, we didn't know a lot of people who were investing in real estate ourselves. And so didn't really have that network and foundation. And so we were out kind of building it on our own. And so we didn't even have any cash to start investing in real estate. So we ended up actually taking out a second mortgage on our primary residence. I didn't even know what home equity was at this time, but my house that I had purchased in LA 3 years prior had over $100,000 worth of equity in it. And it took talking to a savvy mortgage broker who was telling me, hey, you know, you could tap into some of that, use it to purchase these investment properties that you're talking about. And that was a huge light bulb moment for me. And something that is very interesting to think about, because if we would have presented this situation to maybe friends and family in our inner circle, it would have probably been not looked at just with a great light, of very, very risky. And so it took educating ourselves and building the network to realize, okay, this is what we want to do. And we've realized in real estate investing, there's a lot of risks that you can mitigate just through underwriting and proper market evaluation and research. And so, yeah, took out that second mortgage to use as a down payment on 2 single family homes across the country. They were new build town homes, build to rent projects, so fairly easy to get into. Cash flowing only a couple $100 a month. So it took one big turnover at 6 months and having to repaint the whole house to see all of that cash flow go away. And so then that's when we really kind of switched gears into multifamily real estate, because there's a lot of power behind volume and numbers once you get into multifamily and apartment buildings.
Yeah, for sure. And something you said in there, it makes a lot of sense to me. And it's something that I feel like a lot of people don't realize when they first get in is that you make your money when you buy the property. You really have to nail down the underwriting. You can't turn a lemon into something good if you don't buy the fundamentals correctly. So let's talk about your buying criteria, talk about how you make those decisions. What does your underwriting look like? How did it change from the beginning? How are you looking at properties? And then now, what is the criteria you use in terms of the metro, the cash on cash that you're looking for, all that kind of stuff?
Yeah, so now since we've switched into multifamily syndications, and syndications, for anyone who doesn't know, is just people pooling together resources, investors kind of joining forces, some people putting up capital very passively to go out and buy these larger apartment buildings that they normally couldn't afford on their own. And so me and my husband, as a general partnership team, we go out and find the deals. We get the finance for the deals. We asset manage the deal throughout the lifetime of the investment. And then we have investors who passively invest with us, who just receive quarterly disbursements every 3 months. And so what we're looking for in these buildings is returns for our investors. So our investors, we're looking for anywhere between a 3 to 7 year hold for these deals. We go out and kind of flip these apartment buildings, looking for really kind of rundown buildings. They're not really optimized to its fullest function. Maybe owners who have held these for decades and they're not letting the expenses go out of control. And so we're going in there and adding value, which is where a lot of money is made in real estate investing, going out there and forcing appreciation into these deals by taking care of some of those maintenance items, which is allowing us to raise rents and really push that NOI, that net operating income of the building. And so the returns that we're looking for in our investors for a 3 to 7 year hold, we're looking for 100% ROI. So if our investors invest $50,000 with us, we're looking to give them their $50,000 plus another $50,000 on top of that. Looking anywhere between a 15 to 20% AAR, average annualized return. And this is the number that you'd want to compare to the stock market, which historically has done about 6% year over year. So these investment opportunities allow passive investors a great way to build wealth even quicker than they're building in the stock market. And then our cash on cash return anywhere between 6 to 9%. And those are the returns that we're really looking at for our investors.
Okay, yeah, that sounds about right. And I understand that. I mean, I don't do multifamily. I do mobile home RV parks and self storage. And I understand multifamily is a little bit more competitive when it comes to the cash on cash. You're looking at a little bit lower cash on cash than as other assets, just because there's more people out there buying them, and there's a little bit more competition trying to get those same properties. So, sounds good. You mentioned all about the metrics. I love hearing that. How about the areas? What do you look for in terms of the metro you're trying to find? Do you buy in lower class areas? Do you only look for the luxury apartments? Obviously you don't, but give me a little bit of flavor on what you look for when it comes to the metro.
Yeah, so actually all of our multifamily deals have been up in Oregon up until now. We have a
Oh,
storage
nice.
facility down in Arizona, but in Oregon we found a really good sweet spot in these mid-side units, anywhere between 12 to 50 units, that are in almost a tertiary market, so strong working class. So in these tertiary markets, the home ownership rate is like 40%, meaning that 60% of the population in these communities are renters. And with the inventory in multifamily, it's just very low. And so it allows us to have very low vacancy rates, less than 5% on all of our buildings, which is great. And so when we're looking at markets, we're looking at strong employment, job growth, just economic trends that show diversity, new companies moving in, things like that. And really, when we're looking at a building, we're evaluating the last 3 years. So the T12 times three. So looking at how the building has been functioning over the last couple of years. And this is where you're really mitigating a lot of the risk, because you're seeing how it's performing. You can make accurate projections into how it will perform moving down the road. And then in terms of just evaluating markets, we're always talking to people there. We're in California, and so we do invest out of state. And so we have very strong teams in the cities that we're investing in. So property managers who can verify our projected rents and rental incomes, who help us manage the buildings, project our vacancy rate. So using them when we're underwriting, also great brokers, and construction teams as well.
Nice. Yeah. Building that team, especially when you're doing it out of state, it can be hard. And I feel you like Washington, Seattle, it's really hard or Washington and California, it's hard to get good deals in those areas. So I look at out of state as well. What what tips could you give people listening on how to build that team when they first identify a metro that they want to start investing in?
Yeah, so be very specific about what you're looking for and what you're trying to do. There's a lot of people out here in this space that are doing all sorts of things, and the more niche you can get and specific in your criteria, the better it is. So we found moving into the multifamily space, it's hard to get brokers to take you seriously. Even with a couple single family homes behind under our belt, it was these brokers have tons of investors that they're getting deals to that have a proven track record with multifamily. It's a bit different beast, especially with the financing. And so they're giving all their good deals to their investors that they know. So getting these brokers to take you seriously and actually send you good deals is difficult. And so what we did initially is we were just super specific on what we were looking for. So when we went to Oregon for our first deal, we were talking to a broker and, hey, we're looking for a 12 to 20 unit, $1 to $1.5 million value add in these tertiary markets. And because we were so specific, the broker thought we had done this before and never really asked for our track record, which is actually kind of rare. He was new himself. He was in his mid-20s with Marcus and Millichap, and so I think he was new enough that he didn't know to ask people their experience and track record, and so we kind of we did that
sometimes luck is what you need, so there you go.
Right? Yeah, did that first deal, and we've done 4 deals with him since. So
nice. I love it. Why'd you guys choose Oregon?
So initially when we first started evaluating different markets and underwriting deals, moving into the multifamily space pretty new, it was just getting practice. So underwriting hundreds of deals in different markets just so we can see and how to compare. And then when you actually do see deals, you can evaluate it quicker and quicker. And so we were doing it really out of curiosity and to practice. I have family up in Oregon, and so we knew some of the markets, and we were just like, hey, curious to see kind of what some deals look like over there, and then ended up finding a really good deal and move forward on it, and then have been doing deals there ever since.
Nice. Yeah, I love it. Portland is the nemesis of Seattle, but I love Bend. Bend, Oregon is beautiful. It's a great place to be.
Yeah.
Right on. Well, I took a peek at the clock. It looks like we're running it down. Before we move on, though, I want to quickly ask about your tech startup, Invest Health. Invest Health now, correct?
Yes, Invest Health. Yes.
Invest Health. Yeah. Tell me about it. What are you guys doing? Give me the juice.
Yeah, so that really kind of stemmed from having a lot of conversations with healthcare professionals. So especially as a nurse and then raising capital with Networth Nurse, it's opened a lot of conversations with healthcare professionals about their finances and investing. And actually during COVID, I was working as a nurse manager at the time, and I was overseeing procedural units. And at the start of the pandemic, when we were shutting down all the surgery spaces, I had to lay off a big team of staff members, and we didn't even know at the time if they were going to be getting money from the government. And so it opened a lot of conversations with me with healthcare professionals about their finances and investing. And it was so disheartening to see and hear doctors and nurses and people that I work with who can literally save lives, have no idea or insight into how to manage their money. And so Invest Health is a financial wellness platform for healthcare professionals. So it's heavy education based. It has resources, calculators, different tools like that. And we're taking it B2B. So business to business, we're going directly to employers with our product for them to offer it to their caregivers as a value add benefit feature.
Very cool. Well, it sounds great. I hope you guys have great success with this. I have so much respect for nurses and everybody in the healthcare profession. You guys do God's work. Love what you do. My sister, she was an ER nurse, and then she was the director of the ER, and she got burned out. And so I totally get it's a hard job, and I appreciate you guys doing it.
Yes, there's a lot of burnout there. That's why I'm so passionate about sharing these resources.
Yep, for sure. All right. That moves us to the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with education. I need 2 recommendations. Could be a book, could be a YouTube channel, whatever. Give me your favorite, or one for general life wisdom and then one for business/real estate.
Ooh, general life wisdom. I'm gonna say The Four Agreements by Don
Mm,
Miguel. It's just
good
such a
one.
great book. I love it. Read it
Yeah.
very regularly. For real estate you said real estate investing for the second one, right?
Yeah, business
Or
or real estate.
okay, business. And I'm gonna say Who Not How. It's not real estate specific, but Dan Sullivan, it talks about just kind of building a business and scaling and getting to situations where you need a who and not a how. It's a great business book.
Yeah, I've had that recommended a few times. I haven't read it myself, but I think it's got a lot. I like the message. I like the title at least. It has a good message.
So good.
And Four Agreements, that is one of my favorite books. Great recommendation. All right, next question is for your younger self. So let's go back to the Savannah, who was still a nurse. Well, I mean, you're still a nurse, but who had zero experience in real estate. So go back to her, look her in the eye, give her one piece of advice moving forward.
Ooh, I would say keep your head up. Just because as you're pushing through this, it takes a lot of grit. You have to overcome a lot of obstacles, and staying positive is what keeps me moving forward.
Yeah, for sure. You're going to get kicked in the face. That is going to happen.
Many
So
times.
just keep moving forward. Eventually, you'll get to where you want to be.
Yeah.
All right. Next question is about your business. The first three positions you hire for form the foundation of your business. So, what were they for you? And would you do it differently if you did it again today?
Um, so a VA pretty early on helping me with social media management, calendar management. She helps me with a lot of other things. It's kind of just having a right-hand man, someone that you can delegate things to all day long. And that's just been huge for me and my stress levels. And I would definitely do that again, hands down. I recommend it to a lot of business owners, implementing a VA just to help with kind of some of the tasky things that you're doing. And to be honest, that's really been the only person that I've hired. I have graphic designers. I have someone that helps me with my website. Those are huge. Those are two people that I have doing work for me on a weekly basis. Graphic design, just creating marketing material, different things in the business, both my businesses. That's been big. And then website development, just because there's things that change on that very regularly. So having someone that you can send a quick message to update on demand is pretty nice.
Yep, for sure. So it sounds like tech, and then the first one is the VA. That's a lot of people's first hire. You got to get one, you guys. If you're just getting started out, you really don't need that much money. It doesn't cost a lot. Get somebody on
Mm-mm.
Upwork.
Yep.
$6 an hour. I've seen it. You'd want to pay them more, but you can start out pretty low, and just get them. Offload some of those tasks that are just a thorn in your side, and you're going to be happy you did.
Upwork is the best.
Absolutely. All right. Next question is about the US. It's a big place out there, a lot of opportunity. Give me the single city, the single metro you're most excited about investing in.
Ooh, I would say Atlanta, Georgia. We are looking to get over into the South, and I'm just very excited about that market.
Nice. Not many people have said Atlanta. I am also big on Atlanta. I've been looking for deals out there. I think I don't know if they've already gone out there, but Amazon is going out there, and yeah, good place. Um,
Marvel, Tyler Perry, Dwayne Johnson. Yeah, a
all
lot of things
those,
are out there.
all the good things. All right, next question is, I lost my spot. So there it is. All right. It is about mentors. None of us are islands. We all stand on the shoulders of giants. So give me one mentor who has contributed significantly to your career today.
I would definitely say the Michael Blanc community. That's been huge, especially scaling into multifamily. It's a really cool community and a lot of resources. My husband and I were coming into this space with not a big network of people, and no one we could really trust. And so kind of diving into that network has been big.
Nice. Yeah. Yeah. There's a lot of guys that provide those kind of like mentorship communities. I feel like it's so useful, especially when you're getting started out, if only for seeing people doing it, the same thing that you're doing.
Yeah.
When I got started out, it was just me, with some mailers, and being able to see people have success around you really motivates you. So, love to
Yes.
hear that. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, learn about Networth Nurse, learn about Invest Health. So what is the best way for people to reach out and get in contact with you?
Yeah, I am very active on all social media. So you can find me on almost every platform under Networth Nurse. So Instagram, YouTube, LinkedIn, TikTok, Twitter, all the good things. I love connecting with people. So if you're remotely interested in anything I've been chatting about, I have two websites as well, networthnurse.co and investhealth.com.
Perfect. I will put those links in the show notes. So if y'all want to reach out to Savannah, just click a little more in the description. It'll pull down the full description, and in there you can find those links.
Awesome.
All right, Savannah, that wraps it up. Thank you very much for hopping on the show.
Yeah, thanks for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is you give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.